Hi everyone, welcome to my video on how the stock market works. The first question we should probably ask is, what is the stock market? The answer is, the stock market is a place for people to buy and sell stock. Another way of looking at it is that people are trying to outguess each other to find out which stock they can make the most money off of. The reason that companies publicly trade their stock is because they can expand more off of it than they would if they were owned privately. For the consumer, it is a place to make their money worth more. If you invest well, you could earn anywhere between 10 to 20% of the money that you put in. The biggest part of the stock market are single stocks. These are individual companies that are being publicly traded. When you invest in a company, you are now a part owner of that company. It may be a very, very small percentage of that company, but you still own part of it. The key to buy stocks that are usually pretty solid when they're at a low point, and then you can witness them rising up, and then you can sell that stock. This is probably the best known part of the stock market. Each company has a set limit on the amount of shares that the public can buy, and the less shares a company has to work with, the higher the price is going to be. To counteract this, when a company is running low on shares, they will split the shares in half, meaning they will have double the amount of shares available at half the price. However, some companies, like Amazon, will never split their shares, so their price will keep climbing. There are two different types of single stocks. The first are blue chip stocks, which are stocks of big name companies, like Coca-Cola or Apple. The other type of stocks are penny stocks, named because you can buy an individual share for a couple of cents. These are small businesses. This type of stock is way more unstable than blue chip stocks. The next thing that one should know about is where these stocks are traded. They are traded in markets all around the world. The two largest ones outside the United States are the London Stock Exchange and the Tokyo Stock Exchange. However, neither of them are as big as the two stock markets that are in New York. NASDAQ is the smaller one, and it focuses more on technology companies. The largest one is the New York Stock Exchange, which has a market cap of $30.2 trillion. There are a couple of reasons to buy stock in a particular company. One reason is because of the price. You should find a stock that is in your price range, but do not think about just getting one share. Get a cheaper stock that you can buy more of. That way you will get more money off of dividends. You should also do your homework. Most places that have market data will have history of a stock for up to 5 years in the past. Use these websites as a tool to make a decision. Another thing to consider when investing is the dividend payout. Dividends are basically a company giving you money as thanks for owning their stocks. An example of this is Apple stock has a price of $170.89, which is probably not the case at the time of viewing. They will pay you 1.7% of that every year just for owning their stock. This leads to an annual dividend of $2.92 and a quarterly dividend of 73 cents per share. Most companies pay their dividends quarterly. It is a great way to keep reinvesting, as after a while you have enough money in the dividends to invest in another share of stock. The final thing to check on for a stock is its volatility. This is how much risk is involved in a stock. Your risk tolerance will be different from someone else's, and the only way to determine yours is to experiment. The only thing I can tell you is that the more risk involved, the higher reward. By the same token, the more risk means you are more likely to lose it all. One additional tip is to diversify. Do not put all of your eggs into one basket. That way, if one of your stocks plummets, you will still do fine. Do not invest all in the same sector either. If you have a lot of stock in technology companies, try sprinkling in some industrial or healthcare stock. Final, and most important tip is to only invest in what you understand. If you do not know what you are putting your money into, then don't put your money into it.